You probably know that stock market has been making record highs and largest stocks in the world has been valued at trillions of dollars. But you probably also know that the best traders who are trading on these stocks are making a killing, and many of them are actually trading in day trading. That means that they are holding their trades less than 1 day or even less, maybe just for 1 hour or less. Yes, this might happen, and this is quite profitable if we have market situation like that. But of course, the key question here is what are the best approaches and best strategies with day trading itself, because day trading is not just simple one strategy. Day trading could incorporate anything that we like, and provided by the fact that we are trading on short term. And what's more important as well, you could actually be day trader for all of the markets in the world, because day trading is day trading. Whether you are trading crypto or stocks, the approaches and methodologies are similar. Yes, of course, application might change because they have slightly different characteristics, markets themselves. But if you understand day trading with one market, you wouldn't have any problem to understand day trading in other market as well. So watch this video, because this video will help you to understand how trading is done, and you could apply it not only for stocks but other markets as well. So now I have two methodologies. I would share you this in proper way with proper stock examples. So let's roll on. Firstly, I want to segment day trading into narrower trading strategies, and this is scalping. Scalping, I would say, is subsection of day trading where we could actually trade with even less time frames and trade durations than with typical day trades. So here we could actually trade for a couple of minutes up to a couple of hours. And yes, many approaches are the same, but it's important to understand that here are slightly different criteria where you are trading scalping. Firstly, you have to have really liquid markets. Secondly, you probably will be using very narrow time frames, so just a couple of minutes of time frames and not more, and you will have tight stop losses and tight take profits. And last but not least, if you are trading stocks, avoid to trade these stocks before major news or any kind of announcements, because chances are that even if you will have good trades and good trade setups, you won't be able to execute these trades if there is something huge, because the stop losses and take profits are so narrow. You have to have perfect price execution, and with really volatile markets, it might not go to happen in the way that you are anticipated to. So these are some words of caution, but now we could actually explore best approaches with scalping. Okay, now we have 5-minute chart, and as you see, even in 5 minutes, Apple's chart might rose for several dollars. For instance, here at Monday 25, it went from $230 to $235 just in 10 minutes in last days of the trading session. So from here, actually it went from here to here in, yes, it was like, how much? It was like 10 to 15 minutes, yes. 5, 10, 15 minutes, and we actually went for $5, because I actually don't know, because probably we had some news releases and some strong market reactions there, but that's the trick. You don't follow fundamentals if you trade scalping, unless you want to avoid specific trade or market, because markets are moving here basically simply on price action, and if we have something as strong, we have plenty of opportunities. And this is no one trade out of context, because as you see, there are many trades like this where, for instance, we had fall of $4 and then we had another rise of almost $4 as well in matter of hours or less. So these are opportunities for scalpers. Trick for you is to make money on these short sharp trades. What are the best approaches here? Well, actually the approaches are really similar, because you can use here moving averages or breakout trades or something like I don't know, MACD or other indicators which are based on trend following and trend trading, because here on this sharp breakout, trick is to trade once prices have been making such a strong move. And in that case, you have to see that into context, but there is nothing that fancy. But here's the one thing I want to address. If we trade these kinds of trades, for instance, pure breakout trade here, once we have consolidating pattern here and huge spike in price action and volume, we need to have extremely tight stop losses. So if we are trading from $131, our stop loss will be maximum $1 or $2, and our take profit will be $4 to $5. So with these short time frames and short trading strategies, you absolutely have to have like $1 or $2 maximum stop loss and $4 to $5 maximum take profit, so you know that your risk reward is 2 to 1. Otherwise, you have to have extremely good strategy. If you want to have like equal risk rewards for each trade, it will be really difficult for you to trade, because then you have to trade within these short couple of dollar time frames, and I wouldn't suggest you to do that unless you're serious professional, because it's really difficult to make money here. But it's easier to make money if you are avoiding to trade here and watch it simply as a supply and resistance lines, and then you are taking simple breakout trade here. So this is the approach for scalping. So takeaway is simple. Scalping is quite similar to other trading methods, only we are narrowing time frames and we have really short price durations. And with largest stocks, prices are making spikes for relative regular time periods, so you don't have to wait a lot for trading opportunities. But the trick is to use really narrow stop losses, and you have to have take profits which are at least twice as large as those stop losses, so your risk rewards is at least 2 to 1. And here most likely you would probably trade on price breakouts, and whether you are using them on Fibonacci levels or something like that, that's up to you. And with moving averages it might work, but those trades will be slightly larger, so I would say moving averages, and it might work, but it might be working on, I would say, slightly larger time frames as well. So focus on any kind of price breakouts and price action strategies with short spiky moves, and do not mess your risk management. But here's the thing, if you want to trade correctly day trading strategies, and if you want to see how this applies to all of the stocks and largest stock market indices, join my free Telegram channel. There you will see stock market analysis, trade analysis, and you will see ways how to set up trades with the day trading strategies. And what's the best thing, you will get free trading signals. Yes, you will see the strategies that are done correctly, and then you will get exact buy and sell places where you could place your trades. And all you have to do is visit my link below the video, join me, and you're all set. But now let's continue. Now I want to add other indicator that is quite interesting for day traders. Okay, now I have one indicator which is VWAP, or volume weighted average price. It's kind of similar as with moving average, but as opposed to moving average, which tracks larger levels of trends and you could use it for long-term trading, as opposed to that it actually doesn't track price, it tracks volumes. So it's used by many actually brokers and trading analysts to see what are the price patterns and whether they have some, I would say, out of ordinary moves due to spikes or decreases in volume. But actually it could be transferred for trading as well, because, well, as you see, it works in similar pattern as with other indicators. So you could use it either as a range bound indicator or trend bound indicator, because, well, firstly I would use it, yes, we have 5-minute charts here, but as you see with 5-minute charts we have quite choppy approach here. So now I use this indicator to 15-minute approach, which is more, I would say, more applicable for day traders rather than pure scalpers. The idea is really simple. You could simply use it as a tool to see whether prices are bullish or bearish, but as I told you at intro of this indicator, you don't trade large trend moves. For that we have moving averages and indicators based on price. But for volume you could actually use it as a short-term indicator to see quick price reversals. As I'm scrolling here now, there are many good examples, and for instance here you could see, well, what I could give you as a best example. Here this is a best example because we have narrow price action, and you could use it as to trade between those upper and lower lines. So you could use this if price reverts and go long, and go short as well when prices are reverting from support line. It's not support line, but I'm calling like that. This is one approach. Another approach is if prices have been going strong at one direction, but it's kind of same thing, that you are simply using this as a bet for prices to reverse. Prices are going relatively good at one direction, it's even up for the major support line, and then price action was weaker, and now you can use it as price reversal tool. So you could see there is strong price action, prices reverted to previous levels, and then you are shorting it. But as with all the indicators, even if you use it for support and resistance trading in the day trades, it could be working pretty good if we have good price execution levels. The trick is have to have good stop losses. So this take profit level, which went from here to here, has to be twice as large as stop losses. So you have to have narrow stop losses. For instance, now we had this short trade from 229 to 228. So that means only 50-cent stop loss will be added here. So $1 take profit, 50-cent stop loss. So 1 to 2 take profits as the key here, because as you see see, markets might be really choppy and you could have trouble to try to get into right market conditions. So you might be quite frequently, but you will have a lot of trading opportunities. So this will be like high amount, high volume, high intensity trading, where you are simply making lots of trades. So you could have like 2 or 3 trades in every 15 minutes, and you have to have that good risk management edge here. So you know that even if you're right at 50 to 40% of the time, you will have twice as large profits than losses, because otherwise you will be eaten up really fast and you will have a lot of small losses which will eat all of your capital, because those small gains simply wouldn't pay for these losses. So this is what I want to address to this strategy. It's relatively unknown if you compare this to moving averages and any other indicators, but it might work if you have short trade duration, small amount of take profit to small amount of losses type of trading strategy, where you are simply making lots of small trades, small losses and slightly larger profits. This might work for that. So see for yourself, test it, analyze it, and see, maybe this is your strategy. But of course, if you want to see more, join my Telegram channel. There you will see lots of strategies and lots of approaches how to trade this correctly. And of course, watch rest of my videos for trading and day trading. So bye and stay tuned.